In today's video, I am going to be outlining my full thesis for Ethereum as an investment. So often we get caught up in short-term price movement, but sometimes it's important to take a step back and observe what is being built, because in the end, the biggest gains often come from the best long-term investments. If anyone asks you in the future, what does Ethereum do? Why do you believe in Ethereum? Well, I want you to refer them to this video, because throughout this video, I will be explaining the case for Ethereum and some of the most important dynamics in the market which structurally make ETH a very good long-term investment in my opinion. Now, before we get into it, remember this video is not financial advice. It is purely just my opinion for entertainment purposes only, and I always encourage you to do your own research in crypto. Now, without further ado, let's get into the video. The first point that I want to make is that Ethereum and Bitcoin are very different assets, and I kind of hate when people compare the two. When the Bitcoin maxis hate on Ethereum and the Ethereum maxis hate on the Bitcoin maxis, like, guys, they're two very different things, and it's important firstly, before you even consider investing, to understand the difference between both of these products. Bitcoin, in my opinion, is a digital gold. It's a digital store of value, and Ethereum, on the other hand, is more of a digital oil. Think of it as crypto's commodity, which is a digital currency that is needed to power the world's biggest and most programmable decentralized network. It's a very important distinction to make. One is a store of value, and the other one is essentially a technology bet, a bet on future technology, and a pretty pure bet on the advantages that blockchain technology offers, and in my opinion, a pure tech bet on blockchain technology itself. The first point I want to make when it comes to investing in Ethereum is that ETH has stood the test of time. So in crypto, we see cryptos constantly come and go. The top 10 market cap of crypto has changed so much over the last few years, but since ETH's launch in 2015, it has been a pillar of the top 5 crypto rankings, and we can see that if we look at the historical snapshot. For example, we take a date in 2016, we could see ETH is sitting here at number 2, and basically ever since its inception, it has had a top 5 spot, and it is still the number 2 biggest cryptocurrency. So I do think it's important to note the validity of its price action in the longer term, because usually from cycle to cycle, we see cryptos come and go. The strong performers end up being the weak performers next cycle, and then narratives tend to rotate. But it is powerful when you get coins like Ethereum, which can repeatedly offer nice gains over multiple cycles. And if we look at the chart, that has been the case. So this is on the logarithmic setting, so you get a feel for the scale here. You know, Ethereum basically trading sideways from its inception from 2015 to 2017, had its first really big bull run in January 2018. Then it basically traded sideways during the bear market for a period of years before it had a huge boom in 2021, which resulted in Ethereum hitting all-time highs of above $4,500. It has come down since then, but is still performing pretty well historically. I mean, overall, the trend for Ethereum has been upwards. Each cycle it has continued to make new highs, and I believe that next cycle Ethereum is going to make even higher highs, and in today's show I will explain exactly why I believe Ethereum is well positioned exactly to do that. The first reason is institutional demand. It's something that since Ethereum was first created, we've been talking about, and it is the talk of the town when it comes to Bitcoin at the moment, surrounding Bitcoin's recent ETF applications from the likes of BlackRock and WisdomTree. So could the Bitcoin spot ETF potentially set a precedent for other digital assets, for example, Ethereum, to also get approval? Well, I do believe that this could be the case. So Bitcoin getting a spot ETF would be a massive development in crypto in general, because it shows that the SEC is accepting of making a spot ETF for a digital currency. And not only that, but EDX Markets, a new crypto exchange, which is backed by Citadel, Schwab, and Fidelity, actually listed Ethereum as one of the assets that could be traded on the platform. Now, because this new exchange has the backing of big players in the space, it's very unlikely that they didn't consult regulators prior to creating the exchange. And thus, I believe that alludes to the possibility of Ethereum being considered a commodity. Of course, that would bode well for Ethereum's case in terms of getting a spot ETF, but just being named a commodity, or at least a non-security in crypto, is a big win because it laxes the regulation on where an asset can be traded. Now, the CFTC chair, so the head of the Commodities Commission, said that Ethereum is a commodity. Gary Gensler has said everything, apart from Bitcoin, is a security, but we are seeing the action now of, for example, the EDX market starting to allude to the fact that ETH is probably not a security. And I think some of the actions over recent times, for example, the SEC not calling ETH a security in the Binance and the Coinbase lawsuits, does allude to that possibility as well. The other factor in terms of institutional demand, so let's assume, we do get a spot Ethereum ETF, or let's just assume we do get clarity over crypto from a regulatory perspective, so institutions can now buy crypto, because the thing is, it's a big issue at the moment. A lot of institutions, even if they want to add crypto to their balance sheets, they're scared to, because they have certain stakeholder requirements, and one of those is obviously, to not upset the regulators. So a lot of them go risk averse and haven't been adding crypto to their balance sheets. But when we do get regulatory clarity or ETFs which make it possible, then what will they add to their balance sheet? Will they add Bitcoin? Will they add Ethereum? Well, there is a case for Bitcoin, absolutely, being the oldest, the biggest cryptocurrency, the most stable, the store of value. There's a big case for Bitcoin. But I also believe there is an underrated case for Ethereum from an institutional perspective, due to one major factor, and that is the ESG component of Ethereum. Because Bitcoin operates on a proof of work network, the amount of energy that it costs to actually produce Bitcoin blocks is massive. Ethereum, switching from proof of work to proof of stake, can now operate under a 99.95% reduction in its energy usage, which makes it, from an ESG perspective, because a lot of these corporations and institutions have to take into account environmental concerns, it's a much better asset than Bitcoin. So I do believe that as ETH gains validity as a product and has more time in the market, performing like it has been, that institutions could opt for Ethereum, not necessarily instead of, but at least alongside Bitcoin. I think as the second biggest cryptocurrency in the market, there is a genuine case here, and that could be one of the driving factors for increased demand in the future. Another driving factor for increased demand in the future could be the fact that governments have pretty much used Ethereum as their blockchain of choice. Being the biggest blockchain in crypto, having the most developers in crypto, has meant that Ethereum has been used across multiple pilot programs from governments and, large institutions like Australia, Brazil, and Norway, just to name a few, to pilot things like CBDC programs. So Ethereum being the biggest cryptocurrency, if you are going to have government pilots or wide-scale government rollouts of blockchain networks, it makes the most sense to either use ETH or ETH L2s, which are all under the wider ecosystem of the Ethereum network. So just to give you a few examples, Australia piloted a digital dollar CBDC, which they used for a trade with a US dollar stablecoin using an ETH L2 blockchain. Norway's central bank is embracing an Ethereum layer 2 for its central bank digital currency CBDC pilot. And the Central Bank of Brazil is also conducting a digital real pilot project, which will use an Ethereum compatible permission blockchain for the issuance of the tokenized version of the country's currency. Now, due to the network constraints of the Ethereum network, you will notice that a lot of these pilot programs are opting for Ethereum L2s, which are faster and generally more scalable. But nonetheless, that is all within the broader ecosystem of Ethereum, and it gives the ecosystem more validity. Now, all those could potentially be demand-side factors, but I want to talk about the biggest factor here, which really underpins the vast majority of my ETH thesis, and that is simply the law of network effect. So if you don't know what network effect is, it's based on something called Metcalfe's law, which basically dictates how the value of a network grows with each participant. So you can see this is a simple network structure in front of you. When there are only two network participants, they can only connect with each other, which creates one edge. This is just mathematics. When there are 5 participants, they can make 10 unique connections, which creates 10 edges. As the number of participants grows, there are more unique connections. As you can see, the formula is here, with 8 participants equaling 28 edges. So for every single new participant in a network like the Ethereum network, you actually create edges exponentially, according to Metcalfe's law. So the more users Ethereum builds, the more exponentially the value of that network grows. And that is why something like a unique address count for Ethereum going up in this manner is so important, because with each new user, the value of the network is exponentially growing, and we really don't at this stage have many applications at all that retail genuinely want to use. Like, we are so early to blockchain. I want to make that point so clear. The reason why I believe in Ethereum as a long-term investment is because the fundamentals are here. The fundamentals are strong. in terms of its technology and also its user base, but the use cases, we haven't even scratched the surface. We don't have massive retail games. We don't have a massive DeFi ecosystem. They're all very small use cases, but as we see governments starting to pilot transactions on the Ethereum network, as we see more and more development taking place, I know these big blockbuster applications that people will use in their everyday lives are going to come, and at that point you will really see network effect starting to take shape. So that is a major point I want to make. And you will also see, of course, a huge increase in the daily transactions, whereby a metric like this is really going to dictate your day-to-day usage of the Ethereum network itself. So with the growth of the network, what does that mean for Ethereum? Well, while it was under a proof of work structure, where there was lots of new issuance coming onto the market, probably not as much as it is now that Ethereum is under a proof of stake structure. What this has enabled is, because there's less issuance coming onto the market during times of high network activity where there are a lot of transactions taking place, Ethereum has actually at times become deflationary as more Ethereum is burnt. So if we look at the projection of ETH, since the merge, 3 million ETH, which is over $3 billion worth of Ethereum, would have entered the market. But now that it's on proof of stake, since the merge, roughly 300 days ago, we've seen a reduction or a burn relative to the issuance of 280,000 Ethereum. So ETH technically right now is deflationary. Now, will it always stay deflationary? Probably not. We may see Ethereum tick into inflationary periods for certain periods of time based on network activity. That's okay. But the bottom line here is that Ethereum moving from proof of work to proof of stake has significantly altered the supply dynamic to the point that at certain periods it can become deflationary, which means there's actually Ethereum being burnt. Now, 𝗕𝗬𝗕𝗬𝗓 made a comment here on Bitcoin and ETH. He says, people surprised by the ETH plus BTC squeeze, wait till you see what happens in 2024, which is next year. Simple clarity. Only 2 tokens have crossed the chasm of being a crypto store of value, ETH and Bitcoin. ETH supply has run out and Bitcoin's is shrinking to under 1% soon. There aren't enough coins. And although that's kind of a meme in crypto, like there aren't enough coins, at some point this actually becomes true. At some point there simply won't be enough coins to sustain demand, and that will mean eventually the price goes up. Now, if more Ethereum is burnt, that will subsequently reduce the amount of Ethereum coins in the market as well. So that's another major supply dynamic, which goes towards what 𝗕𝗬𝗓 is saying here. But I think what he means is, look, there's just a lot of demand for ETH. At some point, people just don't want to sell their ETH at a certain price, and eventually the price has to keep recalibrating upwards because people don't want to sell. I mean, I don't want to sell my ETH. If my ETH goes lower, I'm going to stack more. I don't want to sell, and there's millions of other people like me who are doing the same thing. Maybe you're in the same boat as well. Maybe you're just stacking ETH. At some point, like Bitcoin, the amount of liquid ETH diminishes significantly, not only because of the ETH supply burn, but also because people are actually staking their ETH because you can get yield on staking. And as the staking ratio increases, as we'll touch in a second, that's just another factor that is affecting the supply side of Ethereum and making the asset more scarce. Now let's look at demand side factors for Ethereum. The first thing that I want to touch on, which I alluded to before, was a potential Ethereum ETF and institutional demand that could come off the back of it. This has also become a bit of a meme over the past few days, but I still want to point it out because this gold chart, as you can see here in 2005, that was the date that the gold spot ETF was approved. 5 years later, gold had over 5x'd in price to $1,800, driven by increased demand due to the increased accessibility of being able to purchase gold on the stock market. Now, who knows when an ETH ETF will be, but this could be something that kicks in at some point, these kind of gains just due to the sheer accessibility of ETH due to an ETF. But the more relevant demand side factor right now, and it's actually also a supply side factor, is the ETH staking ratio. So because ETH is now proof of stake, you can earn a few percent per year actually staking your Ethereum. Now, it's a demand side factor because now you have a trusted asset in an economy that enables you to earn yield. Now, with the world in general starved of yield, especially as interest rates are projected to be lowered over the next year, less yield in a market creates the demand for finding opportunities which can offer yield. So in terms of Ethereum, these coins will be more demanded in a low interest rate environment because people will want to stake Ethereum to earn yield on a trusted asset. Where else can you get programmable yield on an asset like Ethereum. It's a very unique value prop, and maybe one day you'll see just general retail or super funds or institutions wanting to earn passive income on an asset they like, aka Ethereum, and they just decide to lock a whole bunch up and stake it. So it's a demand side factor because being able to get yield gives you that incentive to buy it and stake it, but it's also a supply side factor because as the staking ratio of Ethereum increases, you actually have less supply on the market. So market buys will affect the price a lot more because there's less Ethereum tokens liquid. It's just basic supply and demand dynamics, and you can see in front of you the estimated staking ratio over time has increased. So now there's almost 20% of Ethereum being staked. If we go even just to the start of the year, only 8% was staked. And this was thanks to the Shanghai upgrade, which now enables redemptions of ETH on the Beacon chain. So it's gone from 8% to 20%, and I only see this ratio increasing more and more over time. I mean, there are some proof of stake coins in the market right now which have 70 or 80% staking ratios. ETH, compared to other proof of stake coins, is still extremely low in terms of its staking ratio, and that's just simply a reflection of the fact that staking on Ethereum, at least natural organic staking through the Shanghai upgrade with Beacon chain redemptions, hasn't been around for that long. We can also see here via this yellow chart that Ethereum staking has increased over time alongside price. That trend has been pretty apparent over the last year or so. The other point I want to make in terms of a demand side factor is the demand for development on the Ethereum network. Now, the more development you have on a network, and this isn't just true for crypto, this is true for traditional tech, generally the more users you are going to accrue. Why? Because strong development leads to quality dApps, quality applications on that network. Quality applications attract users. Once you have users, that is where you get capital inflows, and that's where you'll see metrics like TVL, total value lock, start to increase. When those metrics increase, not only is more, in this case, Ethereum being used on the network, but the price, because of the demand for Ethereum, tends to increase alongside user growth. So everything in crypto starts with development. Where you see the most developers is typically long-term, where you see the most growth in the value of the network. And Ethereum, it has a clear lead here. So when I'm looking objectively at the market, where the developers are, it's undeniable that Ethereum has the lion's share. Almost 2,000 active full-time developers. That's almost 4 times the amount of the next highest, which is Polkadot, and it laughs in the face of some of these other coins, including the Bitcoin network. Now, this may not include BRC20 or Ordinal's development, but nonetheless, ETH is well ahead of other ecosystems. That is also a super strong factor that I don't think you can deny, and it kind of goes alongside an argument I made at the beginning of this video about the fact that Ethereum's been around for so long. Ethereum's also had a lot of development happening for a long time, and often with development you see a lagging effect. So development happens, you don't see products launch, and then suddenly it seems like products are shipping all at once because you had that substantial basis of development. Remember, Ethereum is basically a technology company, so the fact you're betting on technology at its early stage means these things take time. It's only been around since 2015. They only just started initiating some of their major roadmap upgrades over the last few months. So this is going to take time. It's going to take years to play out. And I think people, severely overestimate what can be done in a few years and severely underestimate, what can be done in a decade. So people want price to go up, number to go up now. But long term, the foundations here are just being built. And I hope you understand through this video the picture of, just how powerful the landscape of ETH can become long term. Now, on this roadmap point, it's interesting because a lot of people say, oh, ETH's very centralized. Bitcoin's more decentralized. And yes, that's 100% true. And if you're an advocate of decentralization, of course you would much rather hold Bitcoin. But here's the thing that they're missing. Ethereum, due to its relative centralization, at least compared to Bitcoin, gives it the ability for them to upgrade the technology. If Bitcoin wanted to pivot from proof of work to proof of stake today, it would be virtually impossible. Imagine coordinating a shift on that scale given the current mining configuration. It would just be impossible. Ethereum, they managed to do it. They managed to change the engine of a rocket ship mid-flight and change the consensus mechanism from the proof of work consensus to the proof of stake consensus. And this is just one example of a difficult task that they are able to do due to the fact that they are more centralized. Now, long term, are they going to become more decentralized? Yes, absolutely, I think so. But in the short term, is there a benefit to being more centralized? Yes, absolutely, because you can actively upgrade the technology over time. And you can see they are currently conducting a roadmap, which is outlined in front of you, to make the technology progressively better. We had the merge, next we are getting the surge, the scourge, verge, purge, and splurge, but these are going to take the best part of a decade to complete, and along the way we're going to see hiccups, and we're also going to see new upgrades, and we've already seen this roadmap be shifted. Things are evolving, things are changing based on market needs, but we're already seeing good progress. So I think Ethereum is kind of in a unique boat here where it's already the second biggest crypto market cap, but every single upgrade we see makes the network progressively better, and every single upgrade we see gives ETH short-term catalysts, which makes, in my opinion, the price more resilient compared to other coins, because every single few months, you're getting a new upgrade, which is kind of giving it more hype and getting it more attention. So ETH rarely dies off from the news cycle because there's always something to look forward to. For example, in Q4 this year, heading into Q1, we can expect the first part of the Cancun upgrade, the EIP 4844 upgrade, which is set to reduce fees on L2s by an order of magnitude. That's great for the layer 2 ecosystem. That's just something we're getting even before the surge that we're getting at the end of this year, and these upgrades are constantly taking place. So it's interesting because you have ETH demand kicking in every few months, and hype kicking in every few months ahead of some of these continuous upgrades. But of course, the greater vision here is just to keep making the network progressively better over time. So what's my plan long term? Well, my plan is very simple. I DCA into Ethereum and Bitcoin every single month with an asset that I believe in over a 5, 10, 15 year time horizon like Ethereum. There's no need to overcomplicate it. There's no need to chop in and out of trades. Now, do I take leverage trades on Ethereum? Yes. Do I enjoy sometimes trading Ethereum for a bit of fun? Yes. Do I enjoy swing trading between Bitcoin and ETH sometimes and back into Bitcoin? Yes. But that's only with a smaller percentage of my portfolio. The lion's share of my Ethereum holdings are long-term holdings, which I rarely touch, and I prefer to just stack over time consistently. Now, your plan is going to depend on your financial goals. So you might not have a time horizon as long as mine. You might have a shorter time horizon whereby you need to be more selective with entries. I do something called progressive DCAing. Now, what this is, okay, I know I DCA every month into Bitcoin and Ethereum. I know that I'm DCAing into those two assets specifically, but I do change the variables of A, what percentage I DCA into ETH versus Bitcoin, and 2, which is the most important one, how aggressively I buy. So on big dips, I size up my buys. If it's a month where the price is rising, I won't really look to buy much more. In fact, I might even look to take a bit off the top of my holdings that are in my trading portfolio. So I'll still buy, but much less aggressively. And some months, in really green months, I end up being a net seller because the sells from my short-term positions will outpace the buys from my long-term positions. But in really down months, when we get huge wicks to the downside, for example, last November when we saw the FTX saga happen and ETH dropped under $1,000, that is a month where I'll size up and go super aggressive with the long-term goal of accumulating more tokens. And it's kind of funny. If you're going to trade altcoins, go for it. I love trading altcoins. In fact, alts can make you a lot more money than Bitcoin and Ethereum. But if you are going to trade them, just make sure you're actually going to outperform an asset like ETH. Because if you're not, you may as well just buy ETH and chill and actually get some sleep at night than trying to risk it too much with altcoin trades. So because Ethereum typically leads into new cycles and will outperform for significant periods of time versus other alts, a lot of the time, just being in Bitcoin and ETH ends up getting you further ahead, at least in the early stages of a cycle, than you are in altcoins anyway. Now, there are a lot of exceptions, and if you have your finger on the pulse, you can make a lot of money in alts, but for my purposes, I just prefer going much heavier on ETH, stacking it. I mean, Bitcoin and ETH probably constitute over 50% of my native crypto portfolio. And then, I can play around with alts with the other 50% and have a lot of fun. But at least I know my Bitcoin and ETH is there growing long term. And 𝗕𝗬𝗂𝗵𝘄𝗽 said something interesting, I thought. He said, product market fit validation is already evident in relation to Ethereum. Now just have to sit on hands and wait for maths to do its thing over time. Don't waste it on over leveraging. The path is uncertain, but the destination is known. And I think this is so clear. It sums up crypto in general. We know where this is going. We know how much potential this technology has. The destination is pretty much known, but the path is uncertain. We don't know what regulatory headwinds we get in the short term. We don't know what catalysts we get in the short term to cause, huge price pumps like some of these ETF applications like we've seen over the past few weeks. We simply don't know. All we know is that we are on the right path moving forward. Now, this video is not financial advice, and of course, you must make your own investing decisions and do your own research. However, if you are interested in buying Ethereum on your own accord, there is a link in the description to Prime XBT, which allows you to buy spot Ethereum. And if you use the promo code which is miles, you get a 7% deposit bonus up to $7,000 on your deposit, or a 25% discount on commissions on the platform, which is especially good if you are an active trader. As you can see, the Ethereum asset is listed under the trade function, under the trade dashboard in front of you. You can also use OKX if you are in the correct jurisdiction, of course, if you already have a Prime XBT account, and they are offering a $10,000 mystery box for new people that sign up to the platform using the link in the description below. So if you sign up for a new account, you can get yourself a $10,000 mystery box, which is pretty nice. But yeah, OKX and Prime XBT, whichever one you prefer, for Ethereum are both in the description below, as well as other cryptos, commodities, Forex, etc., especially on Prime XBT, if you're interested in the Forex and commodities side of things. But I hope you guys enjoyed this video, because I think it's important that we do sometimes take a step back and look at the long-term thesis here, because I think a lot of people in crypto, they're trading based on emotion. They're trading because they want to get rich really quick, and it's okay if you're one of them, but you actually have to understand the assets you're investing in, and you actually have to develop your own bullish case for certain assets, or else how are you going to have conviction to buy during periods of fear if you don't even understand the thesis? So you don't need to agree with my thesis, by the way. You might disagree, and let me know what you think, by the way, in the comments below if you agree or disagree. If you disagree, that's great. Come up with your own thesis and trade accordingly. But what is the important point to take away from this video is you need conviction. I have conviction in Ethereum as an asset, but you need to have conviction in your own assets if you are really going to be a successful investor long term. Conviction is key. If you don't have conviction in an asset, don't bother DCAing and holding, because you're not going to be able to withstand periods of price volatility and market turbulence. I wouldn't have been able to buy Ethereum, for example, back in the November FTX collapse if I didn't have fundamental belief in ETH as a network and as an asset. So I hope you enjoyed this video. If you did, let me know what you thought in the comments below. Subscribe if you're not already subscribed to the channel. Click that notification bell so you always are notified of future uploads, and link in the description to all of our show partners. Thank you for sponsoring the show, OKX and Prime XBT. I will see you in the next video. Peace out.